All right, everybody, welcome back for another deep dive.
Yeah, excited for this one.
Today, we are talking about something that I think a lot of people are kind of scared of.
Yeah, definitely intimidated by.
Yeah, investing.
Huge topic.
Huge topic. And we have, let me see, we've got an article from Forbes. We've got a chapter from this book about personal finance. We've got, oh, yeah, a couple of Reddit threads, actually.
Oh, wow. Yeah, those can be insightful.
Yeah, super interesting. And we are going to be diving into all of this stuff today and trying to pull out the best advice for beginners who are looking to get started.
Those first steps are always the hardest.
Exactly. And maybe you're listening to this right now and you're thinking like, well, this isn't for me. Like investing is just for like rich people, people with tons of money.
Yeah, you hear that all the time.
Yeah. And you know what? That's just totally not true.
Yeah. I mean, you
Yeah.
can start with basically nothing these days.
Exactly. You can start with like $100, $50.
Even less in some cases. It's really incredible.
So that's what we're going to be talking about today. Like, how can you get started, with a small amount of money, and actually start seeing some growth and hopefully make your money work for you.
Absolutely. It's all about setting yourself up for success, even with a little bit.
So first question, I guess, is why even bother, right? Like if you're just starting out and you just have a little bit, is it even worth it to invest?
That is the question, isn't it?
Yeah.
I mean, honestly, it is so worth it. And this is where we get into the idea of compounding returns. And I think it's something that a lot of people don't quite grasp until they actually see it in action.
Yeah, for sure.
So there's this really great analogy that I saw in one of the articles that we read. Basically, imagine a tiny seed.
Okay.
You plant it, and at first it's just a seed, right?
Does look like much.
Nothing. But over time,
Mhm.
with, water and sunlight and care, it eventually grows into this massive tree. And that's kind of how compounding works. Even a small amount invested consistently over time can grow exponentially because you're earning returns on your initial investment, but then you're also earning returns on those returns, and it just keeps building and building.
It's like a snowball effect almost.
Exactly. And the earlier you start, the more time that snowball has to roll downhill and get bigger and bigger.
So it's not so much about like how much you have at the beginning. It's more about just starting, even with a small amount, and just staying consistent.
100%. Consistency is key here. It's like a marathon.
Yeah.
You don't start by trying to sprint 26 miles.
Right.
You slowly build up your endurance over time, and that's how you get to the finish line. And it's the same with investing. Like, you just got to keep at it, keep contributing regularly, and over time, you'll see that growth.
Okay, so that makes a lot of sense. Now, let's say, I'm ready to start investing, but there's so many options. Like, where do I even begin? What do I actually invest in?
So many options, it can feel overwhelming.
Yeah, it's like a jungle out there.
A jungle for sure. So I think for beginners, a great place to start is with ETFs and index funds.
Okay, I've heard those terms before, but to be honest, I'm not entirely sure what they mean.
Yeah, no worries. They get thrown around a lot, and it can be confusing at first. So an ETF or exchange-traded fund is basically like a basket of stocks,
Okay.
and it lets you invest in a diversified portfolio, meaning like a bunch of different companies with just a single purchase.
Well, that's cool.
Yeah, it's really handy. And you can find ETFs that are focused on specific sectors or industries. So like, let's say you're interested in, renewable energy. There are ETFs that focus specifically on companies in that sector.
Oh, so it's kind of like a pre-made investment package.
Exactly. Like you're buying a little slice of that whole sector or market.
I like it.
Yeah.
So then what about index funds? How are those different?
So index funds are a little different. They track a specific market index, like the S&P 500.
Okay, I've definitely heard of the S&P 500.
Yeah, everyone's heard of the S&P 500. It's like the popular kid in school.
Right.
But basically, an index is like a benchmark that measures the performance of a group of stocks. So the S&P 500 tracks 500 of the largest companies in the U.S.
Oh, okay. So if I invest in an S&P 500 index fund, I'm basically investing in all of those companies.
Exactly. You're betting on the overall performance of the U.S. market, not just one individual company.
Gotcha. And so are those considered safe, like ETFs and index funds?
Well, I mean, no investment is completely risk-free, right?
Yeah.
But compared to picking individual stocks, they are considered much safer, especially for beginners.
Right.
Because you're spreading your risk across a whole bunch of different companies, you're diversifying your portfolio. So even if one company doesn't do well, the others can help balance it out.
Makes sense. So it's all about not putting all your eggs in one basket, right?
Exactly. Spread the love, spread the risk.
So, okay, I'm sold. Yeah. I want to get started with ETFs and index funds. Where do I actually buy them? Are there any specific platforms that you would recommend?
There are a ton of platforms out there. It can get a little overwhelming. I personally mention specific platform names from the source. There are a couple that are known for being beginner friendly. They have really easy to use interfaces, and their fees are pretty low, which is important when you're just starting out.
Right. Yeah, you don't want to be losing all your money to fees.
Exactly. You want your money working for you. But yeah, when you're choosing a platform, just think about your own needs and preferences. Some platforms have great educational resources if you want to learn more. Others offer a wider variety of investment options, so it really just depends on what you're looking for.
Okay, so now I know, like, where to invest and kind of what to invest in, but, like, what about strategy? How do
Yeah.
I know, how much to invest, how often? What's a good approach?
Yeah, strategy is super important. You don't just want to throw money at something randomly. You got to have a plan.
Right.
And I think for most beginners, especially if you're feeling a little overwhelmed, a simple long-term hands-off strategy is usually the best approach.
Okay. I like the sound of hands off. What does that actually look like, though?
So remember that seed analogy we talked about?
Yeah.
You plant the seed, you nurture it, you let it grow over time. You're not digging it up every day to see if it's sprouted.
Yep.
Investing is similar. It's about consistent contributions over time, not trying to time the market or chase after every hot stock that you hear about.
So it's more about, like, the long game than trying to get rich quick.
Exactly. Slow and steady wins the race. Like you mentioned, you're saving up for a down payment on a house, right?
Yeah.
So that's a great starting point. Maybe figure out how much you can realistically invest each month to get you closer to that goal without, completely breaking the bank.
Right.
And then just stick to that plan, be consistent.
Got it. So consistent contributions, what else? Any other, like, practical tips for this kind of, like, plant and let it grow strategy?
So first of all, make it automatic.
Okay.
Like set up automatic contributions from your bank account to your investment account each month. That way you don't even have to think about it. It just happens. And treat it like a bill,
Eh.
like it's a non-negotiable expense that you pay yourself every month. And another thing you can do is reinvest your dividends. So dividends are basically payments that companies make to their shareholders.
Okay.
And if you reinvest those dividends, you're essentially buying more shares of that company.
Oh, so it's like
Mm.
free money that you can then use to buy more stock.
Exactly. It's like a little bonus that helps your investments grow even faster.
Awesome. I like it.
And then finally, there's this thing called dollar cost averaging, which sounds fancy, but it's actually pretty simple. It just means investing a fixed amount at regular intervals, no matter what the market's doing.
Okay.
So let's say you decide to invest $100 every 2 weeks. You just keep doing that, regardless of whether the market's up or down.
So don't panic if the market drops. Just keep investing.
Exactly. Because over time, it helps you average out your purchase price. So you're not buying high and selling low, which is what a lot of people do when they get emotional about the market.
All right. Yeah, that makes sense.
Yeah, so those are just a few tips. But the most important thing is to just get started. Don't overthink it. Don't let fear hold you back.
Okay, so this is all great advice,
Yeah.
but I'm curious, even with the best strategy, are there common mistakes that people make when they're first starting out that we should try to avoid?
Yeah, for sure. Everyone makes mistakes. It's part of the process.
Hmm.
But there are a few big ones that I see a lot with new investors. The biggest one is probably letting your emotions control your decisions.
Right, yeah.
The market goes up, the market goes down. That's inevitable. But when people panic and they sell everything when the market drops, that's when they really lose money.
Yeah, that makes sense.
It's because they're selling low, and then when the market goes back up, they've missed out on all those gains.
So patience is key.
Patience is so key. Got to have a long-term mindset. And another mistake I see a lot is people chasing hot stocks.
Oh, yeah.
They hear about some company that's doing really well, and they think, oh, I got to get in on that.
Yeah, it's like FOMO.
Yeah, total FOMO. But they're not doing their research. They're just buying it based on hype.
Right.
And a lot of times those hot stocks end up crashing and burning.
Ouch.
Yeah. So that's why diversification is so important, remember?
Right. Don't put all your eggs in one basket.
Exactly. Spread your investments across different industries, different asset classes. And that way, even if one investment doesn't do well, you're not putting all your money at risk.
This has been super helpful. Thank you so much. I think we've covered a lot of ground today. Starting small, ETFs, index funds, having a strategy, not panicking.
It's a lot to take in.
It is a lot.
But honestly, the best thing you can do is just take that first step.
Yep.
Open an account, start investing, even if it's just a small amount. And remember, this is a journey, not a destination.
Yeah, it's a marathon, not a sprint. We said that.
Exactly. And as your financial goals change, as you learn more, your investing strategy can evolve too. So I guess the question for you listening out there is, What does your ideal financial future look like? And how can investing help you get there?
That's a great question to think about. And you know what? No matter where you are in your financial journey, it's never too late to start investing and building that brighter future. So keep learning, keep exploring, and remember, we're here to help you every step of the way.
Absolutely. We're all in this together.
All right, that's it for today's deep dive. Thanks for listening.
See you next time.
Bye.
Bye.